The discussion before the break, we touched on once or twice about new players that are coming into the space. And on the banking side, these have become to be called the challengers. So it's a sort of general category of the new entrants in this space. So we've got one of them now to take us forward. So Julian, I saw earlier on, please. So Julian is from Starling Bank, which is one of the UK's challenger banks. So hopefully he's going to give us a fresher perspective on some of this stuff than we got from the older people like me before the break. So
what I wanted to do today is two things. One is talk to a little bit about what we're doing, and also then talk about how we're doing. How are we going to disrupt the market within the UK and Europe overall? So if we look at technology and we look at what impact technology has had on financial services, it has yet to touch the dial in our view. We can do so much more with technology, and the disruptors, the disrupting banks, the fintechs, can do so much more. So we're at the beginning of the curve, not the end of the curve. And I'm going to give you some examples of that in a moment. I guess when we hear the other keynotes today, we've heard a couple of things. You know, we've talked about data, we've talked about change, disruption, etc. But the one comment that I thought was kind of interesting is when people start comparing fintechs versus banks. I don't understand that concept, because I am a bank, but we're also a fintech. And our culture and our behavior is much closer to how Spotify do things than how Barclays does things. So you can have a bank that does fintech. You can have lots of banks that don't do fintech, and that obviously creates an opportunity. But there is also a real distinct opportunity in the marketplace for banks to offer services to other fintechs, and we'll talk about that in a moment. So let's just introduce Starling Bank to you. We were founded in 2014. We got our banking license in 2016 in the UK and went live in 2017. We are a current account or checking account only on a mobile phone. So that is really looking at the technology here that says you look at your mobile phone usually hundreds of times a day. You do your current account, your payments, everyday payments, many times a day. Putting those two things on that one platform creates a real opportunity, and it's the right channel to use that product. We fundamentally don't think it's the right product to get a mortgage or a pension or to take advice, financial services advice. So it's about having the right channel and the right product. As I mentioned, we're a technology company. We have everything in the cloud, and we base that all at Amazon Web Services. I kind of joke here that my business continuity is if I lose my building, I just go to the Apple Store, buy some more Macs, and sit in Starbucks. Literally, we have no infrastructure in our office. Now, what that means is that the agility that the cloud gives us, the agility of building our own software, our own platform, means that we can move incredibly quickly. So as a bank, we've been going live with real customers, not friends and family, for about 10 months. We have 140 people, including our customer contact center, in the bank. That is an incredibly small number. I read the other day that HSBC in London has over 1,000 lawyers, and they're probably all working on GDPR as well. But the challenge is that with only 140 people and building our own software, we can move incredibly quickly. So what is our business model here? Let's just talk a little bit about that, because a number of people will be thinking that this doesn't kind of make money. The thing to bear in mind is our bank has got three main components. One is the current account, which makes money through overdrafts and transactions on the cards. But we also have the marketplace. And this is a fundamental part of our strategy, and it will come as a theme over my next couple of slides here this morning. The fundamental part of marketplace is we are only good at one thing, which is current accounts. We are not very good at loyalty. We are not very good at investments. But there's a lot of other fintechs who are fantastic at doing that. And so what we do is we, through our APIs, open up our bank and create a marketplace. And in a true market, there are multiple people going to be selling you various different products. That becomes really, really interesting. Now, let me just give you a couple of examples of there, because we were talking about loyalty earlier on in the keynotes from this morning. And one of the partners we've worked with is a company called Flux. And what Flux does is gives you item-level data from the retailer. Now, that has been the holy grail of loyalty schemes for many, many years, and trying to get that data back to the consumer. And so if you go into a retailer that is integrated into Flux, then in the Starling app, you will see item-level detail. That creates a huge opportunity for the retailer. It creates a huge opportunity for supplier funding. So if it's Coca-Cola, why isn't Coca-Cola going to market to those people who don't buy Coke, who are buying coffees or whatever? But it also creates an ecosystem for that retailer to start communicating, because retailers do not have access to customer data, as we've talked about. The loyalty schemes they've run in the past tend to be pretty expensive and actually become more of a discount rather than actually true loyalty. So this marketplace that we've created creates this opportunity for other third parties to bring fantastic innovation to our customers, and also to the retailers and other merchants. The third part of our strategy, so current accounts and marketplace, the third part of our strategy is Starling Payment Services. This was not in our business plan. We didn't think we were going to do anything like this, but being part of the building a current account, we had to then be part of the UK banking system. And so we integrated into faster payments, we into BACS, we're a principal member of MasterCard, etc., and started to then realize that we'd actually done things that were really, really difficult. Now, for those of you who are not in the UK, or from the UK, faster payments is the equivalent of SEPA Instant. There's only about 15 banks in the UK that are connected into that world. We were number 13th. People just don't interface with them. What they do is they go to some of the big banks like an RBS or a Barclays and say, will you sponsor us? So the day we did our press release that said we were live on faster payments, the phone started to ring. And being very agile, we suddenly realized there's a market opportunity here and started Starling Payment Services. And what this does is provides access into the payment systems, faster payments, as well as SEPA. We'll be joining SEPA Instant in December. And we joined SEPA Direct Debits and Direct Credits last December as well. We are the only provider of real-time access into the faster payment system in the UK, all through APIs. We don't have the concept of batch. It just doesn't compute with us at all. And so what we managed to do is very easily and very quickly create our biggest revenue earner for this year. So that is an organization that has pivoted around. We're still absolutely passionate. Our core premise is our current account, but we found another revenue opportunity. And that actually creates a lot of different interactions with us. Now, part of doing this, then start thinking a different way of working and engaging within the industry. And when you look at how these relationships have been in the past, you tend to start getting two things happening that are counterintuitive. One is that you go to partners and they will sign up other clients, but then you go direct. And we think this is wrong. We think if you're going to have a partnership strategy, then you shouldn't have a direct strategy as well. So in Starling Payment Services, we don't have any salespeople. We have strategic partners. Okay? We have a very strategic partnership with MasterCard and Vocalink in the UK. But we've also integrated and have partnerships with people like Bankable, who's a European-wide technology company, Form3 and Railsbank. And what they do is they provide us, bluntly, sales, and we integrate with them, and they actually are our route to market. And again, this becomes a very, very simple way of onboarding people into the payments ecosystem. So that's kind of a little bit of a background, a little bit about who we are, etc. And why we wanted to be here today, and what we're really, really proud of to being at this conference in Berlin, is the next stage of payment services, which we're very proud to announce today that we're going into merchant acquiring. And the reason we're doing this is because we think there is a gap in the market. We think that technology has not caught up with the acquirers. There's been some amazing technology that this industry that you guys have all built and marketed and sold, but that has been very much at the merchant and at the consumer level. And that when you then talk to these innovative companies about different products, what you then find is, well, we have slow onboarding. We can't interface. Everything is batch. It takes several weeks for the risk committee to agree whether this client is one to onboard, etc. So there is a real opportunity here. There's a real opportunity to do acquiring differently. And that's what we are going to do this year. So technology is a huge, huge opportunity for us as an industry. Okay? With no legacy, you can do a lot of things. We've proved this. A number of other challenger banks, all the fintechs have proved this. Without that legacy, without that burden, then you can do things fundamentally differently. We have to optimize every single process to be straight through. I don't want people, okay? I want to do this straight through. I want to do this at low cost and at low risk, and that's key. We also know that our partners and our merchants are all European-wide. They're also omni-channel. We should not be saying we're only going to do this geographic region, or we're only going to do this vertical, or we're only going to do this one channel, because that just puts more complexity on the merchants and the wider ecosystem to then go and find multiple providers, and that does not work. We need to make this simple and as easy. And part of that, creating this, making this as easy as possible, is then acceptance of more and more payments types. Okay? We should not be the reason why you cannot service any payment type. We should be ahead of the game completely. So we will get fast and quick onboarding. Okay? When we talk about our consumer and our business current accounts, we can onboard in 3 minutes. Okay? That's pretty damn good. Okay? I'm not promising that for Starling Merchant Services, but it's going to be measured in minutes and hours, not hours and days, and certainly not days and weeks. There is no need to have that level of friction within that process. Clear pricing, software as a service. That's the key part here. We mentioned that earlier today, and that becomes really important. But also the concept of batch. I mentioned we don't understand that. Fintechs don't do batch. So why aren't we doing real-time reporting? Why aren't we doing real-time notifications? Why aren't we communicating to the merchant as much as they want to be communicated with, but in real time, with real up-to-date information, telling them when they're going to get settled, telling them when the payment has been made into their bank accounts. And finally, the route to market is around partners. It's around finding partners who want to go and take this service out to market. This is not about us having a sales team and competing against that. It's not about us being heavily involved in RFPs and things like that. Okay? This is about trying to do business in a fundamentally different way, and that is partnering with people in the true sense of partnerships, where they understand our capabilities and our desires and our risk appetite, without a doubt, but also that they add real value to the merchants. We were talking earlier over coffee. Who owns the merchant? Okay? I would have a contract with them. I understand that. I don't own them. Our partners will own them. Our partners will be interacting with them. Our partners will be managing them. And therefore, if our partner thinks there is a better acquirer, okay, please go away and do that. Okay? That will make me have to sharpen up what I'm doing and what my proposition is. So today, we are open for business. We will be going live in 2018. We are looking and very interested in partners. But I think just to close today, what we're trying to do here is disrupt the markets that we operate within. And I think, as David said when he opened for me to come up here, we are very much about disrupting the industry. The challenger banks in the UK are doing that. We have already announced that we're in Europe. We're already in SEPA, but it is about disrupting the industry, and we can do that as a bank, we can do that with partners, and that will make the whole industry in a better state. So thank you very much indeed for your time.